What's up, world? This is Serge W.D. Haiti with Serge W.D. Haiti, CPA PLLC, where life is good and living is better, and I'm the dreaded CPA. And this presentation is a continuation of this previous series of presentations that I've made in regards to trusts, estates, and transfer taxes. So with this video, I'm going to get into the tax rate schedule, what is an estate, and the different type of trust that could be created by you and your attorney. So as you can see, the trusts and estates have a gradual progressive tax schedule starting at 10% to the maximum rate of 37%. And the marginal tax rate increases about every $3,000 to $7,000, going up from 10% to 24%, 35%, and 37%. But this schedule is subject to change depending on what the Biden administration is planning to do, because this section of the code, of the Internal Revenue Code, is subject to review so that Joe Biden and his administration can generate more revenues, tax revenues, to pay back the money that was being spent on the stimulus that was given out for the past year, and unemployment as well. So at this point in time, this is what the current tax rate schedule looks like. So an estate. The estate is basically a separate entity that is created by a legal document that puts in all the assets of the person who died into this instrument so that it could be accounting for all the income and expenses, so ultimately the distributions could be made to the heirs or the beneficiary of the person who died. And there must be a system in place to record all the administration and settlement of the estate, and it must be reported by the estate. And that's where you can find me, a CPA, to help you out with this process. Now, a simple trust, I'm just only going to name 3 of them, but this is the first of them. A simple trust. A simple trust is qualified to be in this category if all the current income is distributed. It doesn't provide that any amounts to be paid, set aside, or used for charitable purposes. So there will be no distributions from the trust to a charitable organization. And also, none of the assets, the principal, the corpus of the trust is distributed. It continues until the end. Now we have a complex trust. A complex trust is the opposite of a simple trust, and with the complex trust, you can accumulate income, you can provide charitable contributions to an organization of your choice, and you can distribute the principal or the corpus of the trust. It just depends on how you set this up with your attorney. and you have a grantor trust. A grantor trust is, basically operating as a trust, but it's really acting as in the power of the grantor. So the income that is owned by the trust is ultimately going to be owned by the grantor, and therefore the tax is going to have to be paid by the grantor. And these are the elements that the IRS looks for to see if the trust will be disregarded and be placed in this category as a grantor trust. The grantor has a 5% revisionary interest. The income is distributed or accumulated for the grantor's spouse. And when that occurs, the tax is due to the grantor if the benefits are for the grantor. And this is just an example. The income is used to support the grantor's dependent. Now, one example that comes into mind that happened recently, maybe some of y'all probably know, but some of y'all probably, I know some of these young guys gonna go back and Google this, but you can Google this. I believe Dwayne Wade, when he was in Miami, there was a case where he had to pay child support for both of his sons. And the way that he was able to, protect himself from paying too much child support, he created a trust. I would guess it would be a grantor trust, but I didn't get into the specifics of that. And he put all the assets in there and set it up so that when the child support obligation was due, all the benefits or the income from that trust was being distributed from the trust to pay for the child support obligation. So you all can look that up and do some homework on that and see what type of trust can benefit you in the future. So this is just my short little video that I made for the continuation of the series of trust, estates, and wealth transfer taxes. And then once again, this is the dreaded CPA, Serge W.D. Haiti with Serge W.D. Haiti CPA PLLC, where life is good, living is better. If you need more information about trust or setting up a trust, you can contact me through my inbox, through Instagram, or my TikTok profile. Have a great day.